This video is going to build on the previous basics of charting video, and in this video we'll introduce some concepts that are at the heart of technical analysis. We're going to introduce support and resistance. We're going to explain what those are, how to spot them, and we're going to be talking about things like zones of support and resistance as well. So do keep watching to the end of the video so that you get to hear and understand about these different parts. Hello, I'm Peter Martin with Trading 212, and we add educational videos about trading to YouTube regularly. If you haven't already, make sure you subscribe to our YouTube channel by clicking on the red subscribe button, because that's the easiest way to learn whenever we've added new content to YouTube. Well, in the previous video, we talked about the absolute basics of charting by looking at several different types of charts, and we're going to be building on that, as I said already. So let's begin just by quickly recapping those different types of charts. So all four of those types of charts show market price movements, and then technical analysis is using those charts to assess those price movements, and that's done with the aim of gaining insights into a market. For example, is it weak or is the market strong? So technical analysis is trying to answer some pretty basic trading questions, and one of the central ideas behind technical analysis that helps answer these questions are the concepts of support and resistance. So let's quickly look at a chart now and then explain support and resistance. Here we are in Trading 212's web app, and we're looking at a daily chart of euro against US dollar. And it's really this part of the chart that I want to focus on. We can see the price oscillating up and then down and up and down and up and down. And overall it's sort of sinking, but we have these turning points, and that's what we want to focus on. So let's talk about these. This is a section of that chart we were just looking at. One way of thinking about support and resistance is that they are sort of price barriers. And I put barriers in inverted commas because there's nothing hard or fast about this. We'll explain a bit more about that in just a moment, but let's have a look at how this price has moved. We can see that the price as a whole is descending, but it hasn't dropped in a smooth line. Far from that. It's oscillating around. It's sort of moving up and down like this as it drops. Now the net result is an overall decline, but within that overall decline it still rises and falls, rises and falls. So with each rise, when the price peaks, that is where we can say it's met resistance. So we can see that these are resistance points. And then when we have a trough, a falling price that swings back up, we can say the price has been supported at certain levels. So these are our resistance levels here, and here are our support levels. And what's interesting here is that if we look at these two, then they're pretty much at the same level, and that brings us onto a key part of support and resistance. Here, framed in green, we have that same section of chart as part of the whole chart that we originally saw. Now, on top of these two similar levels that we were just talking about there, we can also see some support over here that matches up with support here and here. They're not exactly, only roughly. We can also see roughly that support matches here with here. And then if we look to where there was resistance, then we see a couple of points here and here where the market has encountered resistance at similar levels. Now, if you want to learn more about the reasons behind why we get support and resistance, I have actually done a whole video on the topic, so do check that out if you want to learn more about it. What we could just say is that support and resistance are a tendency that's the result of a kind of herd behavior of traders. What I want to do now, though, is to clarify two important aspects of what we've just been looking at on that previous chart. So first of all, supports and resistance are levels that the market tends to rebound from, so there is a tendency to repeat that behavior. However, earlier in the video when I wrote barriers, I had it in inverted commas because supports and resistance levels are not hard barriers. Just because the market has met support or resistance at a certain level before doesn't mean it has to or will repeat. Secondly, supports and resistance levels are not exact. When we were looking at those levels before, we were saying that they were roughly similar to each other, so not exact. As you can see, this is a daily chart of dollar Swiss in Trading 212's web app. I've drawn a couple of lines on here for support and resistance, and I'm going to use this as the basis for my discussion of those 2 points that we just looked at. So first of all, in terms of there being a tendency, here is the resistance level that I've drawn on the chart, and we can see that we got a rebound here and then another couple here. Now, if you do see repeat behavior, that tends to add weight to the idea that traders are focused on those levels. That means there might be similar behavior if the market returns there, but it doesn't have to. Of course, we can see one area here where it's gone straight through that resistance level. And secondly, in terms of inexactness, we can see that we got a bounce close by to my support level there, and then bounces close by here and here and here. But then this big chunky drop through there, but it has still rebounded. So we have this problem that is not exact. So what you might want to consider, rather than precise support and resistance levels, is to use zones of support and resistance. So this is our resistance zone or band, and this is our support zone. And we can see that this now does a better job of describing where the resistance has been and where the support has been. But even then, we've got this tricky bit here, where at the time, it might look like the market has broken through that support, but with hindsight, the market still ultimately got supported and bounced back. And this is what is called testing a level. Bears in the market are trying to drive prices lower, but ultimately failing. And this typical oscillating nature of a market's movement often serves to obfuscate what is going on in a larger sense. And one final point I want to look at in terms of identifying support and resistance is to look at a line chart and a candlestick and make a quick comparison between the two. Here we have a 4-hour line chart of US crude oil, and you can see how the price has been supported just above $51 a barrel on 3 different occasions in the span of a few months. I've dropped a line onto the chart to show that support level, and we can see that the price may drop, but there has been a tendency when it's got down to that level for buyers to come in, to prop the market up, to support it, push the price higher. It comes back down, that happens again. And when a couple of months later it's dropped back down there again, then the buyers have come back in to support it again at that same level, very close to that same level each time. If we now switch though from a line chart to a candlestick chart, we of course now see additional price information as well as the close. We're seeing information about the open and the high and the low. And so we've got the extreme price information for each period, the low as well as the close. And we can see that the wicks, the shadows of those candlesticks, mean that our chart drops below that line. So you could say in a way that additional price information is perhaps obfuscating things a little, making things a little less clear. Now, of course, it all comes down to personal preference. There's plenty of people who use candlestick charts to identify support and resistance, but you may find as a beginner, just because it's showing less information, it makes things a bit simpler to process, that using a line chart for eyeballing support and resistance may just be simpler. Well, I hope you enjoyed this video, just introducing some of the key concepts at the heart of technical analysis. If you did, please just take a moment to hit the thumbs up button and give us a like. And why not share your thoughts with us on the subject by sending us a message in the comments section? What do you think about support and resistance? Have you got any personal theories on the subject, drop us a line. We do read every message we receive there. But that's all for now from me, Peter Martin, and Trading 212. Thanks for watching. I'll see you next time. Goodbye.